Hi everyone, and welcome to Tuesday. And I know we missed last week, and I do apologise for that. But we're back to it this week about doing, obviously, today we're going to look at the NZSX50 and how that has performed for last week. And then if you are interested, we're going to take a look at channel infrastructure on Thursday. And on Thursday's video, I'm actually going to cover through the methodology that I use when selecting shares. I've had a great question come in, so we'll address that on Thursday. Now, before I share my screen, like normal, this is educational purposes only. It's certainly not intended to be any personalised or financial advice. It's simply just what I look at when I want to look at investing in shares. Whether it's the New Zealand market, the Australian or the US, it's the same methodology that I use for all of them. However, I'm just concentrating on the New Zealand market here simply because there doesn't appear to be anyone else that I'm aware of offering this sort of education on the New Zealand market. There's plenty out there for the other markets. And like normal, if you've got any questions, please sing out, I'm here to help. Or if you'd like to subscribe to my share trading signals, then you're welcome to have 30-day free trial, and of which case I send you out the updates every week on a Monday, and then you can see what action to take or even narrow down your search results for the shares to invest in the New Zealand market. And just as a heads up on that, quite often, especially at the moment, there are not many signals. So sometimes we can go a few weeks without any signals being generated for any new buys. However, where I put my stop loss, I do update that every week. So that does change. So let's jump across and have a look at the markets. Right, I've got the NZSX50 up, and for last week, we did have a little bit of an open, or it closed up, I should say. As you can see, it really is range bound at the moment. We just tend to be going in this pattern. I'll just pop it over 5 years. In fact, you can see that really from here, that it's sort of trading in this range of around that 12,200 points down to around that 10,700 point mark. So we're sort of constantly sitting at the moment in the around again, like I said, that 12,100 down to about 11,600. So we're just really tracking sideways. Last week, I'll just pop it back onto the 2-year. So last week, we did see a little bit of an improvement on the New Zealand market, which is great. Again, not really setting the world on fire or anything like that. When I look down here and look at the ATR, or the average trading range, and divide that figure by where the market indices is trading at the moment, we've got about 1.7% volatility. So it's very, very low risk. Once it hits 5, then I'm definitely quite cautious. Let's pop on our moving averages. And for those who follow me regularly, I always use the 30 exponential and also the 15. Again, there's no magic with these. It's about using something that's consistent and not deviating from it, because if I go and change and use the 150 one week and then the 30 and 15 another, then I'm going to get mixed messages. By consistently using the same tools regularly means I'm going to get a more of a consistent result in what I'm looking at. So with the moving averages, hey, they have crossed to the positive. They did that back in January, and as you can see here, they've just really been sort of trading around that 30-week moving average. It did close below. We had a couple of weeks where it's closed below. However, this last week it's closed back up again, or the last 2 weeks, to be honest, it's closed back up, which is great. Why the market's doing this, hey, I can't answer that. What we're going to see from here, again, nobody really knows. Sometimes when you're in a range-bound market, it can move sideways for a long time, sometimes even years, and then it will break one way or the other. Obviously, we want to make sure that it breaks to the upside rather than the down, but nobody knows. Just have a look at the 5-year period, and this market, this market really had a high back of about 13,300, and that was January 2021. So that, even if I pop it over the max, that's the highest that our market has ever been. And you can it did hit at a 13,000 point level, and that was back in October sorry, January 2021. So that was sort of our most recent high. So we're well off that, trading for a high. And once we sort of can get to those high places again, then like they always say, new highs can create even more new highs. Obviously, a lot of people do get quite nervous once a market does reach a high peak, but who knows what this is going to say. We're well off that at the moment. Let's take that back to the 2-year. So I'll stop sharing. I hope that's helped. Not a lot to really report on the New Zealand market. There's certainly not a lot of excitement happening out there at the moment. It's just a case of waiting and seeing, holding your existing positions if they are going well, and just keeping an eye on the market and just seeing really what happens and taking it from there. So anyway, come back on Thursday, sorry, and we'll look at channel infrastructure. Thanks and have a great day.